Yeah, so I think China has some serious structural economic issues that are not going to be resolved anytime soon. And really, it all boils down to housing, where if you look in the secondary market or previously occupied housing market, prices are down as much as 15 to 20% from the peak, if not more, depending on which city you look at. And again, when the median household in China has 60% plus of their assets in housing, this is a serious issue, and it's going to take time for that consumer confidence to recover. Having said that, on the equity market side, it's priced for a pretty miserable situation. Whether you look at the Hang Seng or the MSCI China, you're 8-9 times forward earnings. I do believe there's a trading opportunity in China over the next 12 to 18 months as the most depressed market. And again, it might be the PMI data, it might be some of the other high-frequency data. I think we're going to start to see upside surprises in areas of the economy outside of housing. And again, even last week we got Lunar New Year kind of data around tourism increasing substantially, cross-border tourism coming back. I do think the consumer will start to spend money, maybe not as aggressively as people had hoped a year ago when zero COVID ended, but there could be an upside opportunity in these stocks.
Okay, and trading opportunity in the next 12, 18 months or so. Themes, sectors?
No, I really think it's company by company bottom-up analysis. I mean, if I look at my colleagues in Lazard Asset Management, they've found more opportunities over the last 12, 18 months, increased positions across different sectors in China. Everything from the tech sector, where you've been able to buy some of the biggest well-known names at sub 10 times earnings, all the way through to financial stocks, in some cases consumer stocks and others. So I think there are a range of opportunities. And the key to me, though, is to recognize it's a trade. There are some great investments in China, but when I look at these structural issues, one of the biggest challenges is the Chinese government is not tackling the structural challenges like putting in place a better social safety net, hookah reform, other reforms around the real estate sector.
They kind of are the structural challenge, right?
These are the big issues. And, if you think about what happened with COVID and real estate prices, one of the long-lasting structural challenges for decades in China has been too much saving, not enough consumption. That excess saving gets channeled into less than optimally productive investments. And we need to change that structure, but the government doesn't show signs of doing that yet. And so, I think what you want is probably to allocate more capital to a global emerging market strategy and allow your manager to move in and out of these markets as they become more or less attractive. And I think right now, China's demonstrating that attractiveness. Who knows, in 12 to 18 months, maybe it's back to Mexico, India, Indonesia, but, these opportunities shift.
In the short term, with the MPC in March, are we going to hear from the leadership a fiscal response, a fiscal stimulus response, which would go some way, I would imagine, in addressing the consumer confidence crisis that's evident in China at the moment?
It's interesting. I'm always reluctant to try to pin one item because I think for the last 12 months, people have been waiting for the bazooka, right? Where's that bazooka stimulus package that we always got in the past? And I believe the government's really reticent to do this because they recognize this all started 3.5 years ago with the 3 red lines policy for real estate developers that then triggered the wave of developer defaults and all the housing issues. The solution to a debt problem is not more debt. And so what's been interesting is we've gotten literally dozens of stimulus measures, including last week the 5-year LPR reduction, which is the biggest in history. I think you're going to continue to get measures like that cumulatively will lead to better economic outcomes. So I don't have a single agenda item or milestone I would point to. There's been some civic speculation that the delayed third plenary session that was supposed to happen in October of last year, maybe when that's announced, people will get more optimistic. You're getting these kind of announcements. But I think it's the aggregation of all the measures that's going to really start to move the needle.